Mainstream Yale Economist Bob Schiller is warning of a, quote, cataclysm for the U.S. dollar if Joe Biden and the EU follow through on their plan to hand $300 billion of frozen Russian assets to Ukraine. Schiller argues it would, quote, destroy the halo of security that surrounds the dollar and be the first step towards de-dollarization across the world. The background here is that after Russia's invasion of the Ukraine last year, the US and Europe froze $300 billion owned by Russia's central bank, who had been using them as reserve assets to back the currency, as all central banks do. This was part of the war sanctions in hopes that it would crash the Russian banking system, leading to social unrest, perhaps to Putin on a spike. Ironically, it was our banks that crashed instead, starting with Silicon Valley, then Signature and First Republic, along with a bevy of lesser stars. Moreover, this was a catastrophic move for the US dollar, essentially putting every country in the world on notice that should they displease Joe Biden, their sovereign dollars will be seized with an eye to putting their leader on a spike. A risk that notably does not exist if one parks assets in, say, the Japanese yen or Chinese yuan, or gold for that matter. And so, predictably, we've had moves all year of countries diversifying out of the US dollar, getting out before they're targeted next, with China only too happy to grease the skids and gut America's dollar empire. And there it stood for 2 years, but now things have changed. Namely, the Ukraine money spigot is running dry. Republicans in Congress just blocked another $60 billion of taxpayer money to Zelensky, while Hungary's populist prime minister blocked another $50 billion from the EU. This has meant a scramble for dollars in Washington and Brussels to feed the Kiev meat grinder. As one EU official put it, quote, we need to find a way to get cash to Ukraine in whatever form, as in legal or not. And so, unable to pass more money in the legitimate political process, the US and Europe are now turning to that $300 billion. A recent US government discussion paper argued the assets could be seized, while according to the Financial Times, another official said Washington is in, quote, active discussions with the G7 on seizing the money. The UK Foreign Secretary claimed there is a, quote, legal route to confiscating the assets, adding that, quote, extraordinary times require extraordinary measures. Now, if a remote contest over a strip of obscure Eastern European cornfields doesn't qualify as extraordinary, I don't know what does. Indeed, Schiller notes that, quote, if America does this to Russia today, tomorrow it can do it to anyone, which makes it very risky for any country to own dollars. So what's next? Brought to you by Unchained. I have mentioned in a series of videos that the US dollar is in free fall, both in trade usage and now reserve usage. If the clowns follow through, it will accelerate the flight from the dollar, going partly into gold, which is already happening, and the rest into other currencies, including the very welcoming arms of the Chinese. In the old days, we assumed the adults in Washington would head it off, moving heaven and earth to protect the dollar. This amateur hour recklessness strongly suggests that, at least when it comes to the dollar, the adults are no longer in charge. Okay, we'll be watching. See you next time.